Hey guys, we're looking at the abnormal volume indicator that was just released for the alert system. So how it works is it takes a look at all of the preceding data for the past 20 to 30 periods, creates an average calculated volume, and then asks the question, is the volume in the current period substantially higher than what we've calculated as the average? And if the answer is yes, the alert fires. Now the why the alert fires is the very interesting part. So we're looking at Litecoin on the 50-minute time frame, and we can see that although price is moving back and forth relatively well, the volume isn't really substantial. There's not a lot of change between the highs and the lows for volume. But once we start to see big surges in volume, things start to change rapidly. So let's imagine that someone is trying to sell 25,000 Litecoins at $160 per coin, and they have refused to move that order, and it's been sitting there for 12 hours. We know that anytime we approach the 160 mark on regular volume, we're not going to be able to smash through that wall. What the abnormal volume indicator can alert in this particular situation is that we've approached the 160 wall and we are starting to chew away at it rapidly. People are buying at that level, hitting that ask, and as soon as that ask disappears and that giant wall disappears, the price is going to rocket. So in this particular situation, I'm not sure if that's what happened, but we can see that we had big volume coming in and we saw that our price skyrocketed shortly after. When you see big volume coming in, you know that supply and demand is going to kick in eventually. Abnormal volume is going to give you a heads up that something is changing in the market.